The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's a brisk morning here in North Carolina. I think it was sub 20, but you guys are not crying for me up in Boston, I'm sure. Got some activity this morning we talked about. Really what's been baked into this gold and treasury market, I guess, is where the smart money has been, saying that, hey, there's some problems. And those indications, we've looked at the notes in the gold. I've not been as bullish on notes as I guess I should have been, but at least I haven't been bearish. Just kind of been, looking at some of these and just kind of, waiting for some opportunities possibly on the short side for these things to reverse. And, gold, look at gold yesterday. I mean, we had the hint of a new profile attempting to appear, a new supply area, and that was just completely broken through immediately after that profile locked in at that 1200 psychological area. Top of the new profile area, 1201. That also coincided with our 240 unfair high. So you've got another breakout situation here. And again, I haven't been the most bullish person on gold in the world, but the technicals, you can't really ignore these. At least, the cool thing about this information is at least it hasn't really allowed me to really lean on the short side because there hasn't, really been a lot of things to lean on. So for you guys who have caught some of these rides up on gold after we had that initial breakout above 1104, we never even went back and really retested it. And that was what I was looking at, that 1104, 1108 area. And I missed a lot of this ride. But if you guys have been kind of playing these breakouts technically, this has been something really, really cool to pay attention to. As far as, is it time to take some weight off? We talked about that yesterday, in fact, that these signs are traditionally time to start taking something off the table. And I'm still going to stand by that. When we have these new profiles appear, if you guys watch this show, a lot of times they will be explored. And it is a time to kind of back and fill a lot of times, historically speaking, or statistically speaking. But, again, you've got a kind of a perfect storm here with looking at the S&Ps. I mean, we've also broken down. And I'm going to show gold on the scanner really quick. And if you don't really need charts if you're just paying attention to these profiles and some of the breadth connotations that we look at all the time. Here's gold. The scanner really pegs it. I mean, these are, green shoots across the board. We had that yellow peel back happening yesterday, but we have a new profile that has appeared, but that's just been completely ignored. And that 27, if you'll notice this, I just want to point this out. This is a carry forward from the original breakout. Even if we've kind of settled in balanced areas, it keeps that count going. So again, you look at our chart here. There's that profile. This is our daily chart. This is the time frame that I pay attention to more than anything else. And here's our landscape view. Here's the level of the market well up here, about 1240 now. So this gives you all these profiles in one view. You get them in a couple of different fashions across the scanner. And you also get this, trend is favorable to longs and has been enforced for 3 weeks. So, it's not turnaround time yet. Those yellow signs too aren't, hey, let's reverse our position. They're just target-rich environment situations for the trend in that direction. It doesn't mean, and we've talked about this religiously, it doesn't mean, hey, let's reverse our position. So you guys have been long. This has been a nice ride, and don't see any red shoots, if you will, to really completely start reversing the position. So, question in the den: J.O., when does gold become more than just a bounce? At what level? So I'm assuming when do you feel like this is kind of more than just a little bit of a scare, fear conversion? Is that the question, Pete D? When is this when is this considered a valid move up in gold? Is that the question? Okay. Yes, exclamation point. You know, I mean, if you look at and let me go back. I'm sorry. We don't have a lot of historicals on gold on this chart right now. Let me do this. Let me do crap. Let me do is crap on that list too, Al? Crap on that list. I'm not supposed to say the words. I seem to say all those words by mistake. Let me do a kind of a continuous contract situation back, so you guys can see a little bit of a history here. Why did they disappear? You got a little bit of a resistance area around where we're at right now. This is the top of a pretty wide profile that happened before, and it's also the bottom of a profile previous. These are long-term weekly views. You know, when is this considered to be a valid move? You know, I mean, I think it's a valid move up right now. I mean, I'm not trading on super long time frames, but when we go into this, and I mean, I look at it as, just like I stated before, it is what it is right now, and I'd like to see some breakdowns start to happen, some eclipsing. And in my opinion, these 240s, I love them. They regulate these long-term trend breakout situations very well. When I say regulate, they give you the support areas, they give you the breakout areas, they give you the support breakout. You've always got to pay attention to those dailies. But when we moved past 1104 and we didn't come back and get the retest, and we just kept going north, that was very unfortunate, because I was looking for a retest. But you know, the answer to the question is, you know, the trend has been broken when we started having that weekly close above 1104. I personally wasn't super excited about it, but that could be taken as that could be taken as, you know, the breakout that happened that you've got to pay attention to. We're coming up in this resistance around the 1240, 1245 areas, but again, you know, we had that new profile attempting to appear, and did appear on our daily. You know, these are breakouts, and you know, as this long-term trend is really on the weekly, showing no signs, no hints at all, you kind of got to use these other time frames to regulate the trade up right now. And I'm not seeing any real indications to go short, as I've been saying. If there were any, I'd probably be going short. We'll be right back, and I'll try to answer the question better when I come back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. And I think we're honored with Juan Villegas, who's called in. Are you there, Juan?
Yes, I'm here. How are you?
Good, man. Good to hear your voice again. Let's get right into it, if you don't mind.
Absolutely. Let's go.
All right. Okay. Well, you and I were talking about gold earlier, and notes and some currencies and things like that before the show.
Yes.
You know, I know. What are your thoughts on gold here? Is there? You had a good question earlier. It was kind of a rhetorical question from somebody in the den about, is this a valid move in gold? But I was basically saying, whether it's a valid move or not, the profiles have kind of not allowed you to really get short here on this move up. So
no way. It's not a short. No way.
Right.
And it's not even a long right now. I mean, that move just started. It's very powerful on the monthly, weekly, daily. Look at that. I might need to wait for retracements to buy this thing again. It's above all profiles. The navigator is now turning magenta. So it's pretty much done, I guess, in the first phase. So we need to pull back to buy more of this.
I agree with you fully. What we were speaking about yesterday, just so you know, to catch up, we were talking about, this new profile appeared on the daily, and then we just blew through it. But those profiles are a lot of times explored. So we were looking at retracements. I think first retracement was like 1175 and some change, and now we've got this daily 1167. But I guess the real retracement now would be 1200, since we've got a new unfair high up there. But what is on the rate structure? This is all so interconnected now, Juan, as we've talked about.
Yes.
Emerging markets, lower rates, dollar situation, gold, a little bit of fear. What are your thoughts on some of those things, and how are you guys attacking them down there? Juan is in Colombia, South America, and I'll be seeing him soon again. But what's your thoughts on some of the the major barometers of the trading world right now?
Well, I guess it's the same thing you're looking on a daily basis, but pretty much everyone is looking at the usual suspects. Is going to be oil. It's going to be the Nikkei, which we believe is going to go down to 14,000. I guess that's where it has more support, 14,000. We're just trading 15,235 right now.
Right.
The DAX, Germany is probably going to visit 8,000 also, so pretty close. Look at what happened in Europe. DAX, Nikkei going down. Gold is a refuge right now in the treasury. So everything is telling you that there's some flight to safety, that people are just worried about this
Right.
uncharted territory with what's going on in Japan, the negative interest rates and all that. So I guess it's a very tradable market. I've been telling you, this is like you get in and out. Intraday is just a magical market. To swing trade this market is going to be probably still, I'll wait for bounces and short bounces, rallies in indices, in crude oil. We're not trading 2663 on WTI. So is a bear market on energy again? And I'll buy pullbacks on gold. And I don't know, Treasury is a little bit too extended for my taste right here.
I think, yeah, I'm kind of with you on everything you said, except I'm we talked about crude oil yesterday. I didn't see like the real panic in that market on the downside as we were kind of drifting lower. So, but the dollar really, I mean, with the dollar getting crushed here lately, not crushed, but just pulling back, it seemingly would have repriced gold a little bit higher just by default, which is concerning. But the 10-year, I've got up right now. I'm kind of with you on the 10-year. This is kind of that move you really want to see, just a massive move up on a. I mean, I think the 10-year I think the 10-year this morning. I think we hit a yield of, was it 155 this morning? That's crazy. How is this affecting? We had a question in the den. Staying on rates for a second. How is this affecting? Is there any kind of fear down there in South American bank structure as far as capitalization, and they kind of have to have a widening yield curve to really make the money that I think their business model is really predicated on. What is the situation going on down there? How's the capitalization, I guess, of the some of the banks down there, and is there any concern? Hello?
Yeah, can you hear me?
Yeah, I can hear you now.
Can you hear me? I might need to turn off the camera for a while. Can you hear me here?
Yes.
Hello, John. Can you hear me? Yes.
We might need to reconnect with Juan, Al. Just let's see. So we'll wait until we get that straightened out. Okay. So we're gonna talk a little bit about crude oil while we're waiting for Juan to get back on and restart that little thing. So we talked a lot about the XLU, trying to figure out how to trade crude oil, showing some relative strength. Some of the star components of the XLU, rather than trying to figure out, the bottom on crude oil, let's try to make it an easier trade. And we always talk about, let's try to find the least painful way of attacking something. And again, we have talked about gold. There haven't been any confirmations to get short on that. Therefore, it's okay to be long, not okay to be short. That's still been the case on crude oil as we have migrated now below 29.26 and retested it for that matter. So we've been thinking on this show, if you haven't been watching it, you know what? Let's. In fact, Tom and I were talking about this yesterday. Let somebody else figure out the bottom. Let's get confirmations, all right, before we start stepping in. But on the way down, we can at least find some strong components if you're going to want to play around with the crude oil situation. There is crude oil right there, red across the board, no green shoots at all, and really you want to see, okay, Juan's back. Juan, are you back?
Yes, I'm here. I have a bad connection though. Can you hear me?
Yeah, I can. That's okay. The question before, and if you could stay on through this next break, that'd be great. The question before was some of the capitalization of some of the South American banks. Is there any like major fear, concern about that financial structure down there as far as you see it?
Of course, everyone's looking at the dollar. Everyone's looking if, Colombia has one of the toughest trade against the dollar. I mean, we have really been hammered. The Colombian peso has really been hammered like 40-50% in 1 year. So it's still the story is the dollar, is oil. This country has financed its public finance has been receiving a lot of revenue from the oil industry for many years, but now with this crisis,
right.
They're suffering.
Okay, we got to go to a break. Can you hang on?
Absolutely.
Okay, we'll be right back with Juan.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. We got Juan Villegas down in Colombia, South America, on the line with us. Juan, are you still there?
Yes, I'm
Great.
here.
Great. You were talking about, how this kind of unhinges normal economic processes when when there's a currency kind of situation at play here. I saw that the peso had gotten, I think it even went more devalued against the dollar, like 3,400 the other day, 3,500. Did it go that high?
We're going that way, and probably 3,600.
Oh my God.
Yes, it's not good.
It's a good time to visit Juan, folks.
It's pretty
but,
cheap to come down here now.
Yeah, no, that's amazing. What a wonderful place too.
You had that experience coming down here, and how much you can receive for your dollars down here is just mind-boggling.
Well, I'm coming back to see you.
Absolutely.
Throw that out the window. I'm coming back anyway, even if the peso's 1 for 1. But hey, somebody's asking in the den also. Yeah, well, I mean, first of all, is there a lot of just really serious concern about the banking structure down there right now with the devaluation really all across the map over there in South America?
Talking about
I'm saying, is there like a concern? Is there a feeling that the banking situation down there, because of all the different things that play right now, is there kind of a fear factor more than normal going on in the as far as the banking industry down there?
Not quite. Actually, Colombia has been open to foreign investment in the financial industry for a while right now, and there's a huge opportunity. Colombia has only 30% of the people, or less, 30% that has a banking account. So you have 70% of the population just waiting for you to offer insurance, investments, pension funds, and all that. So it's a huge opportunity for financial institutions. Of course, it's not going to happen this is a poor country. It's not going to happen in 2 years, 5 years. So it's been happening, and middle class is growing like crazy, and small cities are becoming large cities, and large cities are becoming mega cities. Bogota is going to be the 4th largest city in Latin America in the next 10 years, and maybe it's also getting there. So it's just a lot of traction. Now we have a big infrastructure project like the one Ecuador and President Correa did for the last 5 years. This big 4G infrastructure project. So there's some nice potential opportunities down here. But of course, we also have the headwinds from international markets and what's happening all over the world. And China is slowing down, and that will give us some headaches in the months, probably years ahead.
Well, what's your favorite long and favorite short right now? If you just put a gun to your head, what would you say is the best long trade out there, and maybe the best short trade?
Now, here in Colombia?
Actually, across the board, man. Pick a country, pick an instrument. What's the one you got the best feelings about on the long side and the best feelings about on the short side?
Right now, I won't be able to swing the market. I guess the entry for gold has just passed. It's not, I have to wait for pullbacks. I'll buy more gold. On pullbacks, treasuries, I'm pretty much done with treasuries right here, but I think they still have some room to go. If you look at the monthlies on gold and gold companies, and of course treasuries, I think we need to buy pullbacks again. And short, I'll be shorting rallies on the NASDAQ. I think that there's a lot of companies coming down to Earth after being in the orbit for many years, and those famous unicorns and all that, those companies are coming down to real value. So I think there's a lot of short opportunities looking to short the rallies on the NASDAQ also.
Okay, that's fair to say. On the dollar, what's your thoughts just on the general dollar? That dollar index future, because we've been talking on this show. I've kind of been a long dollar guy for a long time, but when we got down into that 98 area and closed below, and then had the profile appear, I'm showing it on our weekly here above, and we went back and basically kissed it as the kind of closed below. Okay to be short, not okay to be long. Do you think this dollar is just going to kind of hang around this area? Do you think we're going to kind of get a devaluation in the dollar against that basket that it's comprised of?
Well, Mr. Logan, you're an expert reading those profiles, and as you can see, we're trading below the profiles, and 94 is the next targeted support for the dollar. That's how I see it. Okay. Just looking at the profiles, the auction is being controlled by sellers. I won't be buying this thing. I'll be shorting rallies on the dollars. I've seen the euro, making the first higher low on the weekly for the first time in many months. So we got a first higher low on the euro on the weekly. So 115 is going to be the next target for the euro, and I guess the US dollar is going to go down to 94. That's my bet here.
Well, yeah, I'm listening to you. We're coming right up into that weekly unfair high on the euro, but it's really a tough kind of catch a sword situation, as Juan's saying, if you're going to try to play around with this, this dollar situation right now. I'm looking for some signs here, and I'm showing our screen on the scanner right now, and it's again practically a sea of red. There's not a lot of kind of breakages of these profiles continuing to go down. So again, let somebody else kind of get in there and battle it out to figure out the low print. We want to see some confirmations, at least on some time frames, that it's kind of okay to get back in the water at all, and those aren't there yet on the dollar. So I'm with you on that. How about some currency, some emerging market currencies? I know you and the traders down there are doing a lot of currency plays. I mean, how about the real? I mean, is there anything interesting going on in that, or have you been following that particular currency?
Yes, every day, every week we have people in Brazil, in Mexico. So the three major markets here is going to be number one, Brazil; number two, Mexico; number three is going to be Chile; number four is going to be Colombia; fifth, sixth, and seventh, well, that's Ecuador, Peru, and all that. But yes, and all these countries, it's just suffering the same thing that emerging markets have the same problems that we have here in Colombia. We have the same things in Brazil, which is they depend a lot on the oil trade and oil prices. So they're suffering. Their stock market's just suffering, and their currency is also suffering from strength of the dollar. I guess we might. I thought we had a bottom on oil on 30. Now we're trading at 26. Until we bottom on the oil, I don't see these currencies reacting anytime soon.
Isn't it amazing how oil has just almost controlled this situation? I mean, it's just mind-boggling. And again, you're talking about oil, and like I kind of thought we were going to blip down into the 20s and then maybe get back into 30s and settle out there. But right now, we've eclipsed those lows on oil, and I agree with you fully. We just have to wait and see on that. Juan, thanks for coming on today, man.
Anytime. Thank you for having me.
All right, brother. We'll talk to you soon.
Okay, Tom.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We're looking at, had a question about the S&Ps, and we're always going to talk about the S&Ps, probably 10% of the show all the time. So let's get right into it. This is our landscape view here. And as we look at the level of the market, we have, trying to, chart is black. Let's try to get that back up here. How is it now? We got our chart? Okay, got it. So here's our landscape view. You got the level of the market with this yellow line. Here's that inflection point, those inflection points that we were kind of hoping that DMZ would hold. We played around with that. I'm sorry. Let me get our chart back again. Just hope we have it now. Here's the weekly. Here's that 1833 area. Excuse me, down here, and we've kind of punched down below. And remember, this has provided a little bit of a trading opportunity on the long side. And, it's terrifying to be long or short some of these instruments, go to sleep and then wake up and we're 40 points down again, or even 40 points up on the S&Ps if you're short. So, we always talk about put the stops in. This is a relatively speaking 24-hour marketplace if you're going to do some of these things overnight. And this is a great case. Now, yesterday was just an ugly, ugly close, and I, for one, wasn't thinking. We went as high as 1877, and we talked about any of those bounces yesterday morning. If you remember, we talked about 1875. That general area was going to be a takeout point. That's because of a POC, or kind of the mode of this distribution on a relatively wide profile, and that's why we talked about this coming into play, being the top of the mountain. Remember, this is again where we roll down one side or the other. And as we look at this on the daily, that close kind of portended a situation that might follow through on the south side. Here's the 240s. And again, that POC was kind of that target-rich environment on the upside yesterday, and we talked about that pre-market. I tell you what, I got stopped out on with this thing kind of coming down and trying to find support around 1859 yesterday, and then I called it quits. So it was, target, retracement, back and fill, and caught a good move on the upside, but I got clipped on the downside there. So what happens now? It's actually, again, if you're playing around with this, you want to see in the scanner, if you want to try to nibble down here, you're going to have to look at, and I'm going to go back into the scanner here, you're going to have to start seeing at least some green shoots on the 60, and that's just to get some confirmations here, and that's not happening yet. I know we've bounced a little bit this morning, but again, let somebody else figure out the low print, and then you're kind of back in business a little bit, having the edge of being north of some balanced areas, at least on some time frame. That's just not happening yet. The market's probably going to open. There's probably going to be some people that are going to be adjusting positions based on some technical breakdowns that are happening now on the weekly and daily. Remember, tomorrow's Friday. We're going to have a weekly close. If this weekly close is below this DMZ that we've been kind of speaking about as the big floor on this, that's not going to be good. And then you're going to have to be in kind of maybe looking at kind of sell resistance mode from here on out until told differently. Now, as we kind of go back into our breadth situation, you had some new profiles attempting to appear on a lot of internals yesterday on the daily, but I want to go back. This is something, I'm not trying to be a Monday morning quarterback here, but the long-term weekly breadth is a really good barometer of the long-term kind of tie to the marketplace, as Basil has coined it so perfectly in the past. And, has it been like a back up the truck? The internals are kind of changing, and we're supposed to buy the bottom of profiles on indices in a big way. No, these are trading bounces, if anything. And the long-term breadth situation, if we get a close on the weekly on Friday tomorrow below this 1833, 1846 area, we're going to be looking at that area as kind of sell resistance, and the long-term tone of the marketplace since really starting in kind of mid to late December started showing itself relative to the index. And here's the index kind of levels down here. And the long-term tone. This thing has been a very, very good back testing tool too. What we do a lot on automation with this is we look at what's the tie to the marketplace as far as the long-term to intermediate-term breadth. Only go long or only go short the underlying instruments based on the underlying instruments inflection points based on that tie to the marketplace. So what this really does in an automated trading kind of fashion is it buys strong stocks and buys breakouts when breadth is positive and sells weak stocks and sells breakdowns when the breadth is negative. It's been a really, really good system. And if you kind of keep that in mind while you're looking at the scanner, I think it can kind of give some guiding light here. But right now, again, we've been playing around with some trading bounces here on the bottom of these profiles because we just got there, and we kind of have to wait till the market comes to us a lot of times. And those trading bounces right now on those long-term inflection points in a confluence type fashion are over. And if you're going to play around with kind of nibble here, you're going to have to get some green shoots on some lower term time frames at bare minimum. So the answer to your question is the S&Ps. You can find opportunities within the scanner to trade bounces on the S&Ps. What do I mean by that? These utilities, the play really has been because of that dividend component relative to what people can get as far as socking money into the 10-year. Those dividends on some of those, bellwethers, the electric companies, blah, 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 they're paying more percentage dividends, obviously, than the treasuries. So this has been something that's been, really, really easy, situation to take advantage of here as far as the XLU and the components that are the shining lights within the XLU. The XLE, we've always talked about this, if you're going to trade crude oil, what are the things that you can kind of like play around with? They're not going to be as painful if you're wrong. So let's try to always think of, situations like this. You want to go along the S&Ps. You might want to play around with this on a big gap down. Let's try to find stocks that are opening in a cool way. And if I want to kind of pull those up, these are the ones that are trading above profiles on the weekly and daily still, just a simple sort. So again, good gracious. You've got some decent plays here, and I can go into a neutral section even on my daily here, sort this, and I can pick out stocks that are coming down into balanced areas that are still trading north here. Let's just look at Dollar Tree. I don't even have to look at this. So here we go. Here's the weekly, here's the daily coming down into support. Just puts it right on the radar screen, 75.14 support. And then here's the weekly, just trading above profiles. Pre-market, let's see if we're open here. Not open yet, so we're going to have to see how this opens. But remember, in a market like this, you're going to have some pullbacks in a lot of different underlying instruments. Let's find the strong ones. Let's make it an easy situation to try to take advantage of. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got a caller, Ron, from Spokane, Washington. Ron, are you there?
Yes, I am.
Good to hear from you. How are you?
I'm doing fine, thank you. How are you today?
Good, good. What's on your mind?
Well, I was looking at this bear flag on the weekly, monthly chart on the S&P. And according to my chart calculations, I figure we have a potential to get down to the 1760, maybe even 1680 area potentially. Mm-hmm. But I was more concerned is if we actually level out here about 1798, maybe 1803, do you see a potential bounce level?
You know, that's a great question. And what I did is I kind of went to my longer-term continuous contract. And I'm assuming, you know, it's kind of interesting that level that you're talking about because that's the bottom of a profile, a pretty significant profile that we had a big breakout on back in April 2014 to kind of go to the next level. So that profile wasn't completely, you know, I mean, we haven't had any breakdowns as you kind of can remember in a long time until recently. Till we started getting these hints back in August 2015. So can that bottom of that profile be explored? Yes, but you know, Ron, I kind of keep it as simple as I can for me, and I hope other folks are listening to this. I just kind of, you know, I let the profiles really kind of regulate these things for me. There is a really good argument to be, you know, used here that, you know, and we talk about this sometimes. We talk about holes in the marketplace from the past, and holes in the marketplace being where a lot of market participants really didn't pick battles there. There was no balanced area. There is a decent stake in the ground around that 1772. Is that the neighborhood you were just talking about, 1772?
Yes, sir.
Yeah. That's the bottom of a profile from the past on a long-term basis. That's a pretty good stake in the ground as a target on the downside. But I kind of let the profiles kind of predicate those targets for me. I just kind of look at things really black and white with these things. Is it okay to be long? Okay to be short in the current landscape? And I don't do a lot of target practice, if you will. If you watch this show, you probably know that. It's just, are we looking at the breadth? Are we supposed to be long-term selling resistance for the long-term trade? Do we have any trading bounces? The profiles usually tell you when those kind of things, those sea change events happen. But yeah, 1772, looking back in time with you just right there, it's not a bad target if you're looking for kind of putting a stake in the ground on the downside here.
Okay. If you actually, the reason I guess I'm somewhat ambivalent here is just with options expiration coming up next week. Typically, if you would buy, say, at the close of Thursday, maybe even the close of Friday, and hold until Monday, you're usually going to get a bounce. But normally in options expirations week, it's pretty volatile.
Well, yeah. And this one should be probably more so than usual.
Yeah, I suspect it will be. And so my time frames are basically anywhere between a day to about 3 days anymore.
That's probably pretty smart.
Yeah.
A great way, Ron, to kind of take it. If you guys have been watching that Think or Swim show from 12 to 1 every day, it's awesome for learning how to, get the temperament of an options play. But there's a lot of cool ways to trade the S&Ps without having to kind of just go long or go short. Ron, I hear the music, we've got to go, but if you guys want to kind of ask some questions on how do I take advantage of some unlimited upside, limited downside, trading the S&Ps, and you're not in the futures market going long or short, please watch the show. It's great information, and we'll cover option plays on this show too. Thanks, Ron. Stay tuned for Larry, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.